Now, in interpretation note number 14, they talk about this traveling away for part of a day, and they give the example of this reimbursement. So they take 3 employees, A, B, and C, who undertake a day trip to clients away from their normal place of employment. And with the employer's permission, they purchase lunch while they are away. So they're each given an allowance for the day, and then they buy lunch. So A buys lunch for 120, B buys lunch for 150, and C buys lunch for 180. Remember that I said the day rate that has been gazetted is 139 Rand per day. They all claim back for their lunches, all right? So they account back to the employer and claim a reimbursement after they've incurred the expenditure. A claims 120, B, although he spent 150, he actually only claims 139, conveniently, and C claims the whole 180. So what happens here? So the reimbursements paid to A and B, remember now you've got an amount going from the employer to the employee, potentially taxable, unless it specifically falls into the category of being non-taxable. And in terms of section 81A2, which I showed you over here, just going back, we said here that the reimbursement is not taxable if, and then we gave this requirement over here, this new paragraph that has been inserted. Okay, so here we have got the recipient allowed to incur expenditure on meals and other incidental costs while they are away from their usual place of employment for business purposes for part of a day, and they incur the expenditure in the furtherance of trade of the principal. So they're actually acting as an agent of the employer here, and they claim their expenditure back. Then we're saying that what is not taxable is up to the gazetted amount per day, which is 139 per day. So the reimbursements paid to A, 120, tax-free, it falls within that limit. B, paid 150 for lunch, but he only claims back 139. So that 139 Rand is not taxable. C, claims a reimbursement of 180. He's paid 180 by the employer. What is tax-free is 139, and the excess is taxable and becomes remuneration in that month in which the reimbursement is paid. So it's one of these things that one needs to look out for, and just make sure that you have sufficient processes in place in your accounting system to correctly reflect when these reimbursements might exceed the gazetted rate and when they would then become taxable. It's one of those things that can, they're just small amounts, but they can lead to very big problems in terms of understating employees' tax and then having related penalties and interest.